Hey guys, what's good? So let's look over what happened today, where you could have taken trades, and where you could have profited, and let's see where the market makers went, and let's dissect what they did. If you like what you're about to see, like, comment, and subscribe. I'm about to show you how to make some money. So this is pound dollar over here. What we can see is that we have this M formation towards the high of the day, comes down. Now, what the market maker does typically is move 3 to 5 pushes in a given direction before reversing. This is done on the higher time frames. Right now, we're on M15. So we have this information right here, line chart right there. We can see here we have one here, one push, then another, then the third. Now it creates this W formation off the 200 EMA. If you check the EMA video that I also posted here, you'll see why this is a good reason that trade could be taken here. Now, could you go and take a buy here? Yes, you can. But if you look at it from here, you would think that this would go upwards. What you would prefer to see is the price to go over the 50 MA, the 13 and the 50 MA to cross upwards, and price would effectively continue going up. In this case here, price is going down. Now, why is that? In order to understand what the market maker is doing, you need to look at the 1 hour chart. 1 hour chart here is showing that this could potentially be the third level, and it could be creating a new peak formation or a new trend where the market makers are now moving in a different direction. That being said, what you can also see here as well, potentially, is you could potentially also see a head and shoulders formation. This is a very strong pattern that shows that a new direction is forming. So you can see one here, up here, out here, and then down here. That could be a head and shoulders. You can somewhat see it here. It's not the prettiest to look at. So, that being said, look at what happens here. This is roughly the second shoulder. What this also forms is the M. Now, this M here, this is known as a type 3 M. Reason why? Half is in the halfway section of the Asian section over here, makes an M formation over here, bounces off that, and goes downwards. If you want to know more about M and W formations, check out the video listed here, and you'll see more there. So, where could you enter? Depending on what time you trade and what time zone you're in, you could potentially look at taking a trade at the close of the 13 EMA, which is roughly around here. And also, you can have a stop loss above your second and your first leg. How big that's going to be will depend on your risk management and your strategies on that. Now, you can see here that this creates a second leg. This second leg over here is broken up into 3 candles, the partial railroad track um, seen here, and then price, the market makers leave from this area. Now, what you can see here, price heads downwards. And now we start counting how many more pushes coming from here. So you go 1 here, 2 here, and 3 could be coming. So in terms of where you're going to put your stop, your take profit, your stop loss will be up here. Your take profits could potentially be down to the weekly low. Or if you have a fixed target, bring it down to maybe 75, and you can pretty much eat pretty good there. Now, that is pound dollar. If we look at euro dollar, you can see something similar. So here we see a type 1 W here. The first leg over here, second leg's over here. No divergence on TDI. To find out about the TDI and all the goodness that that indicator has, check out this video and you'll understand what that's all about. Now, what you have here is a higher second leg here, closing with a shift candle here. Now, this shift candle is roughly 9 pips. You can see price starts to go upwards. However, it stops on the weekly high. Think about why this could happen. The market makers already have people trapped here, here, also here. And now they have people trapped here as well. If the market makers can induce you, that's you listening to this video right now, can induce you to buy and you think that it's going to continue this way and then take your stops out, they will do that. That's what they do. So what we see here is the M formation right here. What the information is going to do? Pretty simple. We have another partial railroad track. Doesn't close on the 13 EMA, only closes on the 5. That's also a signal you can get in as well for the more advanced traders. Where would you enter? Your entry would be here. If you're a beginner, your entry would be around here because you're going past this middle point here, known as the napier. If you're advanced, you're up here, or if you really want to be sniping, you'll be pretty much up here. Stop loss. When you want it to be above your second leg, this is fine. And pretty much from here, you either have a fixed target or you use an EMA or a previous target or previous point to take profit at. So in this case here, 50 pips is enough. You can see 50 pips happens about here. So in the space of 5 hours and 30 minutes, you got your 50 pips, you're good to go. Or you can continue letting this trade run. It all depends on your psychology and your mental state. If you feel this is enough and you don't want to be greedy, take your 50 pips, away you go. If you feel that there could be more that can add it to this, trail your stop losses and then go from there. If I was continuing this trade and I wanted to run for, let's go for 75 pips, what I would do is have my stop loss now to be above this area here. That's the last place the market maker was before they started to head downwards more. So comment below if you'd like to see how this plays out tomorrow, and we'll make a video on that too. So that's that over here. Now, if we move over to one of the indices, now over here, I took a trade on this, but it didn't work out. Over here, uh, I took the trade around here. So this was a W forming here at the time. EMAs was looking fine as well. However, price came down with some news, and then as you can see here, is continuing to drop even further down. So that's now helping me to understand that price here is coming downwards instead of moving upwards. Okay, so now that we've seen that, there's no really setup here that can be taken. If we now move over to gold, it's roughly the same thing. So gold, in this case here, there was no setup. Price just came down. Is there a continuation trade you could take? Maybe. Um, for example, if you took a trade around here, then you can take this trade here. However, there is also another trade. To know if you can see it, I'll mark it out. Here is a multi-M as well. And there's also a M inside of that, seen here. This is known as a 2-2M because this M, the second leg of that, creates another M. What that means then is that you could take price and have it here. And it also depends on how much you have in terms of your stop loss for gold. Me personally, I use 200 pips. So if I got into this trade here, it would have stopped me out because the pair here has a bit of a spread as well. However, if you did take this trade and you held on to the trade, you can see here that that's breaking 5,000 pips. And if you're curious to know how much that is in terms of looking at how much money you can make from this, then you simply need to go into a calculator. Let's take one for example here. Let's take this gold calculator over here. And what we have over here is we have the amount of pips here. So let's just do 5,100. 20 units is around 0.2 lots, um, which is fine. Okay. And what that means is, sorry, this is actually 2 lots. So what that means here is 8,161 pounds if we're doing it here. If we're doing it in dollars, let's take a look. That's $10,000. So that means with this lot size over here, we've got $10,000 we just made right here by holding this down. Time this took for this to work, about a day and 45 minutes. Now that's quite impressive. So that is the power that Forex can give you. Whether you're a beginner trader, whether you're struggling with profitability, struggling with consistency, this channel is for you. The whole purpose of this channel is to elevate your trading to the next level. So if you find this valuable, please like, comment, and also share this video with other people who will probably find this interesting as well. Now, that being said, let's take a look at some other pairs and let's see what we can learn from them. So if we take a look over here, this is oil. Once again, it doesn't matter about the, the pair itself. Psychology works exactly the same. The method works exactly the same. This is a type 1M. Why is that? Price is away from the Asian section over here. Market makers came up. They came up 1, 2, 3. Right? First leg comes in. What happens here? Second leg comes above, hits 800 EMA. All of this is money. Money right here. Now, what does market makers do over time? Bring it down. Okay, they brought it down, and now they are making a new low. How much is this? 190 pips. Once again, it really depends on your lot sizes as well, and also how much your take profit is going to be. If your take profit for this is a 5-to-1, in this case, if you had a 20 pip stop loss, you're looking for 100. Or if you let it run further than that, that really depends on what you're going to do. So that's oil here. If we look at US CAD over here, not really much to look at as of right now. News happens. Market maker using news to move price in the direction that they want to go in. What's a potential type 1M? But then that was taken away. And we can also see here that this EMA is crossing over. That means on the level, on this level one over here, that we're getting all the EMAs fan out. That potentially means that a new peak formation could be forming. So what I typically like to do is I like to mark out areas where the peak formation has happened before so I can keep an eye on it. Right, coming over here to US dollar, South African rand, you have a sort of a W formation here off the 50 MA. It's not typically a type 3. It is because it's off the 50 MA, but not really because it's off that. Either way, there's a trade you can take here as well. Something for everyone. JPY, nothing here. Pound, Australian dollar, nothing here again. However, there was a type 3 that came from here, which you can then pretty much use going upwards up here. That's where this comes in here. So that would have been a trade you hold overnight and into the next day. Note again, another EMA crossover potentially happening as well. Pound CAD, M forms over here, but consolidates. Typically, when a market maker cycle happens, you will typically have price come up, do its push, make the M, and then sort of move sideways like this. So to a degree, this is sort of happening in a much more compressed format. This is effectively consolidating now. NZD, I had a 200 pip take profit, and that happened. In fact, it kept going higher past that point, but that's fine. Once again, this comes off of a type 2 over here. There is a setup here, so you could take this here and have that up here as well. It really depends on when you get in. Note the fake out M over here. That's quite important. Once again, you're thinking this could potentially move. If price goes under the 50 and the 1350 cross, that is a signal that something's happening on a higher time frame as well. That's a good part to pay attention into as well. Pound yen, not much here as well. Note the huge stop loss right here. What is the market maker doing? They're taking your money here and here and here, and especially here and here. And all these stop losses here, all these top hunts, that's your money gone. Euro, Australian dollar, more case of it happening in the early hours. I'm in the UK, so I wouldn't take something like this, but if you're in the US or some other part of the world, you would be able to take that. And then if you did, that gives you 150 pips here. Euro CAD, creates an M formation here, a small one, and then consolidates as well. Your JPY, not much happening here. Note there's an M, but it pretty much goes nowhere. Your NZD, there's no setup here. There is one sort of overnight over here though. Bitcoin, I made a short talking about this happening here, and this is part of the video that I was talking about as well on how you can also trade crypto. So there is an M formation that happens here. Note there's a higher second leg over the first one. As long as it crosses underneath where the first leg started from, it's a valid setup. That means price can be entered in here, or you wait for it to pull back before entering. So this is about 479 pips, give or take. Quite a drop. Then you also have silver. Once again, it doesn't matter about the pair. The methodology, the psychology, and the strategy is exactly the same. So here, there's a stop. There is a take profit about 84 pips ish. If I want to move it down to 100, make it a nice even. There you go. Once again, nothing happening here. Mirrors sort of what gold did as well. What you see here is this M formation happening here. And then we have US 30, known as the Dow Jones Index. Now, this creates a multi M. Let me explain it to you. So you have this here. Market maker comes in, does all this consolidation, comes back to that same point, then drops the hammer. Boom. Now, if you're trading the indices here, here is your second leg. Here's your time to take it. This engulfing pattern or this railroad track, as we know it in the market maker side of the equation, that's your entry to take it. Does it close on 13? Yes. Does the 513 cross eventually? Yes. What happens? This stuff goes down. 611 pips and counting. What that realistically means, depending on where you are, it means money, money, money. It means money all the way down. Now, with indices, it is a lot of money you can earn from this. And that is it. So, that was the daily review of what happened today, the psychology, the thinking around what the market makers do. Now you can understand this. And if you'd like to see more of these daily market review videos, hit a comment down below, like up this video, subscribe. I want to see if we can get the channel to 100 subs. Hopefully by the end of June. We'll see. Like, comment, subscribe, and we will catch you later.